to making money long term, I feel the best way to multiply your returns is to not chase trends and instead to try to envision what the future trends will be, given how close we are to realizing the technology necessary to make the trend not only real but profitable. Then take a risk based off of that. After all, the way you make money long term is to be contrarian and be right, and that's it. So with that in mind, let's talk about some trends and opportunities that I see that will help bolster our opportunities, help get us in front of trends, and really just help us diversify against a market that is clearly irrational and clearly obsessed with chasing new all-time highs with no immediate regard as to why it continues to go up or what could happen if the bottom falls out. This is going to be a very fast but also very dense video that's going to cover multiple topics as it relates to the different areas I see as opportunity. And so to help with that, I've put some timestamps that you can use to skip ahead or repeat a certain trend that you'd like to learn more about. And with that, let's jump right in with stocks. Now, this week we learned that US tech stocks are now worth more than the entire European stock market. And in the US market, just 5 tech companies, Microsoft, Apple, Amazon, Google, and Facebook, now make up more than 1/5 of the entire S&P 500. And we can see that's the case because if we look at the opposite end of the spectrum, the companies that are not doing as well, 2/3 of the S&P 500 are trading well below their February highs. Now, I think it's clear for anyone who wants to really admit it that we are in a technology stock market bubble. And should any of the big tech companies falter, well, a market-wide meltdown could develop quickly. And you can't really escape that because the entire market swings with them. Now, if Apple has a great day, well, the entire sector and all the secondary sectors are boosted by it. But they're also especially correlated in the negatives as well. Where we see headwinds for the big companies, we see even bigger problems for the smaller ones. So it's a new Gilded Age, and don't bet against Standard Oil. But to be fair, what choices do we have? I mean, be disgusted by it all you want, but you can't deny that this will continue to go on. With interest rates and bond yields approaching zero, investors have been forced into equity names in search of yield. And yeah, even if the technology sector is a giant bubble, momentum alone will still push prices higher before we see a reversal. In a sense, the chief issue we have right now is that diversifying out of the S&P 500, and especially those top 5 tech companies, well, you're essentially betting against the US economy. And I think what's clear right now is that as the pandemic has forced the world to go more digital, well, there are certain advantages of being the country that is the king of a certain industry. Saudi Arabia and oil, China and manufacturing, and now the US and technology. So it's clear to me that all this cheap capital that's flowed from the Fed is propping our companies focused on innovation. While the blue chip stocks have struggled under very real economic uncertainties of today, tech companies have enjoyed entertaining the possibilities of tomorrow. It's made tech companies very attractive targets for investors looking to bet on who will come out on top when all the cards have been shuffled. And as the thinking goes, the future belongs to those who build it. And if we were to look at some potentially interesting opportunities in stocks, I think we would start by looking at how our changing economic situation will accelerate the already strong theme of digital payments. In particular, I could see that Square would set up and dominate loans to small businesses over large banks. Because Square's payment processing and other things that small businesses depend on, Square has a lot of data on them. So when they need to take out a loan, Square knows exactly what kind of risks are involved, what kind of interest rate they think will be appropriate for that risk, and that helps Square to charge a lower interest rate than other big banks, which is just one more hassle that small businesses go through when dealing with them. And elsewhere, we could definitely see some various SaaS winners such as Docu, Twilio, DDOG, AYX, OKTA, and many more continue to gain market share and become the new faces of facilitating the rapidly changing nature of running business operations. And in particular, I see the potential of a platform like Salesforce, which is geared up for enterprise and an increasingly digital economy. And similar to Salesforce, Veeva Systems is the CRM of the pharmaceutical industry and is showing tremendous growth. Elsewhere, we've seen the rise of from-home services like Roku, Netflix, and Peloton, which have shown the need to bring subscription services into consumer homes and build loyalty through pro-consumer practices. And speaking of home, perhaps the digital real estate names such as ZG or RDFN will finally sustain and move higher. A surprising amount of people seem okay with buying homes virtually. I also see the rise of the gig economy as sustained employment becomes more and more rare. And so digital work marketplaces such as Fiverr are going to be interesting as the economy fluctuates and refocuses. And with everyone stuck at home, we could look at online grocery such as Ocado or OCDGF, which will continue to gain acceptance and usage. And finally, we'll see e-commerce platforms such as Shopify and Wix revolutionize online customer behavior in a way that will facilitate a wholly new economy built and based around the online and digital experience. So, needless to say, there are a lot of opportunities in tech and stocks. And even though the stock market is absolutely overdue for a correction, well, that's not going to stop us having opportunity. And it's not going to stop the stock market from finding new ways to express its need for alpha and gains and investment into new and exciting opportunities. So speaking of new and exciting opportunities, let's talk about some initial public offerings or IPOs that are coming to market soon. So if I were to rank some of the upcoming IPOs that will be on the stock market very soon, I would first start with companies like Palantir and Snowflake because they are data focused, and I think this is a very data focused time. Companies that are both digital and data focused are going to continue to do well. And I think both of these companies are good expressions of that. And underneath that, I would look at digital services that are coming to market. Companies like Airbnb, DoorDash, or Instacart. And these will definitely be high profile IPOs. They're going to generate a lot of noise when they come to market. But inevitably, the questions and the concerns are going to be around profitability, and sustainability in an increasingly competitive and complex field. And just generally, are these good expressions of betting on tech that we should be looking at? But if we look more short term on each of these, it's clear that there will be some opportunity to buy and then sell a pump just because of their high profile nature. Ranking below those, I would look at some app-based companies that are coming to market, such as Robinhood or Bumble. And to me, what really differentiates them and why I don't really touch apps as investment is that things like this change way too much. Is there a guarantee that anyone will be using Robinhood or Bumble in 10 years? Frankly, the barrier to entry is too low and all a competitor needs is a better idea. But that being said, these probably have more potential for short-term pump and then sell opportunity. So I would definitely watch out for them just for that. Finally, below those, I would look at companies like Asana or Compass, which may be interesting IPOs in of themselves, but in this environment, I think they're not going to stand out that much. These are a little bit more boring companies to talk about, and inherently what's relevant today is less about fundamentals and more about what can drive hype, which is a great segue into talking about our next section of opportunities, those being SPAC IPOs and EV companies. So we've talked about SPACs a little bit on this channel, and the thing to really know about SPACs is that they're just a different kind of IPO that's faster, cheaper, and really more geared for tech companies that aren't profitable just yet, but show a lot of promise. And I think the best example of where SPACs are being utilized right now is in the rapidly emerging electric vehicle market. While the legacy automotive industry suffers its worst year in recent memory, the EV market smells blood, and investors are always looking to be part of the next big thing. And yeah, sure, where I raised the complaint earlier about tech companies being overhyped and overvalued, there's a lot of EV companies that propose everything under the sun, but really have zero ability to actually execute. I think that was on full display earlier this year as Nikola captured the market's attention and certainly proved that there's an ample desire to catch the next Tesla. What is clear is that there are other competitors that are coming to market, bringing new and interesting ideas. And that's where we see the synthesis of SPACs and EVs really help to make that an expedited possibility. For example, there's Lordstown Motors, where Lordstown had the great idea to retrofit an existing Chevrolet factory into one that can produce electric vehicles. They're also going to specialize, focusing only on trucks and doing everything they can to go to market as fast as possible, try to eat up Tesla's market share around electric consumer pickup trucks. Where Tesla is all about creating the Cybertruck, which is definitely interesting, but Lordstown just wants to bring something that is a little bit more familiar to people and target, the construction business type So I really like that even though they are on the cutting edge and developing new technologies and new vehicles, they're basing their business plan in things that are very rational and realized. And another company I think is doing really interesting things in the EV space is Canoo. What I like about Canoo is that they already have a team of several hundred employees, and they've shown they can actually build working vehicles in a modular platform. And that latter piece, I think, is the key to their success. They're working on what is called a skateboard. It's this modular EV drivetrain, allowing you to basically just streamline the process of building electric vehicles by having all the batteries and the pieces related to moving the vehicle forward, standardizing all of that, and then just plopping on, if you want a sedan, if you want an SUV, if you want a crossover, well, you just plop that body on top of the skateboard. It really highlights and demonstrates the power, the effectiveness, and the efficiency of the EV platform. How there's less moving parts, how it's going to be cheaper and easier to produce. And so for Canoo to be a company that's solely devoted to working on this modular platform, I think that puts them in a really good position. And another company I think is in a really good position, and the market definitely agrees with me right now, is a company called Hyliion. And for some context, I think it's clear to Tesla that in order to continue to capture all this momentum that they've built up, they need to quickly diversify into as many different verticals as possible as it relates to automotive capabilities. In particular, a couple months ago, Elon Musk said that it was time to bring the Tesla semi-electric truck to volume production basically as quick as possible, saying that they wanted to go all out. They want to ramp up as much as production as possible, as fast as possible, which, given that there's only a couple prototypes in existence right now, that's pretty impressive and ambitious. But that's how Tesla sees itself continuing to capture market share and really cement itself as the king of this new industry. And definitely where we see the hottest battles right now in the EV market is basically who can bring a pickup truck and who can bring an electric semi to market first. Tesla's solutions on both of these fronts are pretty impressive, but again, they're not to market yet. But that's where Hyliion is. Hyliion has pioneered an innovation they call the e-axle, which could be incorporated into the drivetrain of a traditional Class 8 long-haul truck. The e-axle essentially is a hybrid bolt-on solution for bringing electric power to the world of long-haul trucking. And really what's game-changing here is that the e-axle could be retrofitted onto older trucks or built into new ones. And the benefits are immediately clear, as the e-axle would add power and torque to a diesel block, allowing it to work more efficiently, improve fuel mileage, and lower emissions, all while capturing power via regenerative braking. It's a pointedly different approach to the electrification of heavy-duty trucks that is pursued by Tesla and Nikola, which are going through the lengthy process of trying to design and sell an all-new truck from the ground up. Instead, what Hyliion wants to do is make sure that truckers who like their trucks that they already have can continue to use them while also making them more efficient. It's a win-win approach because it's drastically cheaper while also being more efficient and cost-effective for existing diesel trucks. And so for this reason, Hyliion has really stood out in its market performance recently, and I think will continue to do so. So some other plays in the EV space are MP Materials, who provide the raw materials that go into the electric drivetrains powering these EVs. And what's interesting is that MP Materials is in a position to be the only low-cost producer of rare earth oxides outside of China, which is increasingly relevant as the trade war and really just global trade in general becomes more stratified and harder to maintain. Some other plays that I would look at for the EV and SPAC space are Luminar and Velodyne, who are working on the LiDAR and automation technologies that will help power these EVs to be more autonomous, have better safety technology, and eventually to be completely self-driving. And while not directly part of the EV industry, it's clear from the example of Tesla that pursuing a more technology-driven vehicle falls right in line with the approach and the proliferation of electric vehicles. So I see them as sister efforts that are going to prop each other up. Some other SPAC plays that I'm looking at are SPAQ, INSU, OPES, FMCI, LCA, NPSTH. Now, when it comes to operating in this market environment, we make it clear over and over again the need for strategy and execution on a defined set of principles and rules. The more you can do to take emotion out of your trading and investing decisions, the more successful you'll often be. The more you have a plan and stick to it, the more consistent your wins will be. So to illustrate that and to show off our brand new site, we've launched 2 new awesome classes that focus on the fundamentals and the strategy of trading. Doc's famous 4 simple rules that will radically improve your trading, otherwise known as fractal energy trading, and one of the hottest new trends in options trading right now, which is called Zero DTE. Both of these classes are awesome and they're really jam-packed with value. And so to celebrate their launch and to show off our new site, both of them are on sale for only $99 for the next week. And you can find links to both of them in the bio below. But importantly, even if you don't want to sign up for a class, I still implore you to check out Zero DTE strategies and other ways of using option strategies to make your trading more effective. Using the Zero DTE strategies, we've been able to maintain an 83% win rate. And we've done so in such a way that anyone with a small account could replicate. But if you're still learning options or have never used them before, I implore you to check out strategies such as the wheel or some of the theta strategies, which we'll be producing materials on in the coming weeks. But those should be a good introductory way of using options to find profit, regardless of the market's doing. And of course, I couldn't end this video without talking about some of the crypto market opportunities. Some of the crypto moonshot, low cap opportunities that I've been looking at include Flow Protocol, Kava, Ren, DFT, RMPL, Meridian Network or LOCK, StakeNet or XSN, DGVC. And yeah, if you're not paying attention to DeFi right now, you probably should be, because there's been a Cambrian explosion of ways to make money in DeFi. I think how cool it is that if I'm holding large positions of BTC and Ethereum, with DeFi, I could first mint WBTC, second lend my Ethereum and WBTC to Aave or Compound. Then I could borrow some stablecoin or even more Ethereum and WBTC if I wanted to leverage my position. Then fourth, I could mint some tokens with the Yearn Zap interface using my stablecoin, then finally lock those tokens into a Yearn vault for some crazy APY. And look, don't use this as a Bible or a guide. This is just an example of how absolutely crazy deep you can get with some of this stuff. You can be double and triple dipping on your positions, earning passive income, while also waiting for the price of your BTC or Ethereum to appreciate. You can make your money make you more money, which then makes more money. It's a great time to really get into this stuff. Let's explore some other opportunities in DeFi. I think they're pretty cool. As mentioned, I could lend out my Ethereum on Aave, go make some passive income for me. And I could do that really easily using the mobile wallet Argent, which accomplishes this in just a few taps. I could also farm some comp tokens using Compound and Argent, or I could farm MTA using MStable, or I could make some fee money using Balancer and rebalancing stablecoins. I could use Gnosis to profit off of stablecoins. I could maximize my yield farming using Instadap, or I could hire a money robot using Set Protocol that will automatically rebalance a target portfolio. I could leverage some pre-built portfolios using Zerion, or I could invest in some DeFi liquidity pools in there too. I could easily deploy my capital across multiple of these DeFi protocols using DeFi Zap. And if I was in the betting mood, well, I could speculate on DeFi using Synthetics or the recently upgraded Augur, or on Polymarket. Or I could trade ETH Perpetual on MCDEX or DYDX, or even sell Ethereum options on Open. I could even collect daily rental payments and DAI using RealT. Or if I just wanted something a little bit more stable, I could buy tokenized gold using Digix Gold. And honestly, I could keep going on. There's a massive DeFi list with many different opportunities of many different ways to leverage your capital. But hopefully the point is clear that yes, while DeFi is very much in its infancy and definitely represents a lot of uncertainty, a lot of risk, and a lot of danger of things like scams. It's still doing a lot to bring crypto to the forefront and make it relevant in a time of race to the bottom monetary policy, cheap capital propping up a market that is not reflective of the economy, and really a world that needs to go through a painful transformation and acceptance of a new digital economy. As we talked about at the beginning of this video, it's all about your ability to see trends and act upon them, to be a contrarian and to be right. This is your opportunity to think about what comes beyond tomorrow and to try to invest in it. So as always, thank you so much for watching the video. And again, don't miss our newest content that aims to teach you how to effectively trade and win consistently like we do. We take very measured risks using very simple strategies, and we have very consistent profit as a result. So if that's something that appeals to you, especially in a time where things are kind of crazy, well, definitely check out the links in the bio below. But in the meantime, take care out there, and I'll see you in the next one. Cheers.